folks. So today we're going to talk about private mortgage insurance. This time, how do I get rid of private mortgage insurance? So in our last lesson we learned what private mortgage insurance is. Private mortgage insurance really protects the lender if you put down less than a 20% down payment on the house. So you have to continue making that payment until your house is paid down to a certain level that you no longer require that insurance. And that depends on what kind of loan you got in the first place. With the newer loans, with FHA and some of the other loans that the government backs, some of those loans require you to pay PMI the whole loan. In most cases, you only have to pay PMI, or private mortgage insurance in general, until your property is valued at 78% of the originally appraised value. So if you bought your house for $200,000 and you've paid down enough payments on it that it's now worth $156,000, that's 78% of $200,000, then the lender on its own is required to remove the private mortgage insurance, which means you no longer have to pay those premiums. So if you were paying 1%, that was $200, or that was $2,000 a year, so about $175 a month or so, based on rough math in my head. However, there are other ways that you can cancel your private mortgage insurance, and that is once you know that you've hit below the 80% value of the original purchase price, most lenders will allow you, as long as it's been 2 years or more in most cases, if you go below the 80%, you can contact your lender and have them remove the private mortgage insurance restriction. So that would save you a couple $100 a month if you had, say, a $200,000 house. Other ways you could do it. If you were to add an addition to your house, you could raise the value of your house enough that you would now be below that 78% or 80% threshold of the value of the property. Now, some lenders require you, if you want to remove the PMI, they require you to get an appraisal. But before you go buy that $400 to $500 appraisal, make sure you contact your lender to see what they require to have mortgage insurance removed. So you could have that you paid down, made extra payments on your loan, which is possible. Matter of fact, I've done another video where we talk about how to quickly pay off your loan. Just make an extra payment, extra little bit of payment every month when you make your payment, and that'll bring it down much faster. One extra payment per year will cut down on a 30-year loan 9 years off your loan. So from a 30-year to a 21-year loan, if you just make one extra payment per year. Okay. So if my payment's $1,000 a month, I would make 13 payments of $1,000 instead of 12 payments of $1,000 throughout the year, and I'd have my house paid off 9 years faster. That's cool. So you could remove your private mortgage insurance because you paid it down faster to bring it to the 78% where they have to take it off. You could bring it down to 80% and get an appraisal, as long as your lender, if that's the way they want it, you could do 80%, or you take your original price, your original value. If I bought it for $200,000 and now I brought it down to the $160,000 in what I owe, I could call up and say, hey, would you guys take off my private mortgage insurance? And they, most cases, would have to do that. In some cases, they would say, you need a new appraisal before we'll take that off. So if that's the case, spend the $400, maybe $500 to save yourself the $100 or $200 a month. The payback is just a couple of months, so it makes sense. So while private mortgage insurance you can cancel, you can't cancel FHA mortgage insurance. That changed a couple of years back in 2008, 2009. So that blows. Another way to cancel your mortgage insurance, whether it's federal or private mortgage insurance, is by doing a refinance. At any time, if you can refinance with a new loan and you owe less than 80% on your property, you can refinance it into a new loan that no longer requires private mortgage insurance. But that new loan will require a new appraisal, most likely, and you'll have to pay fees, loan origination fees, and other fees to get the loan to go through. So it may not be in your best interest to get a refinance. The other thing is, if you refinance, you're resetting your mortgage as far as your principal amount. So whereas the first loan, if I've been paying on it for 5 years and now it's 25 years left in my mortgage and I refinance it to a 30-year mortgage, then I'm back at 30 years. So that's something to consider. Those are ways to get rid of private mortgage insurance. If you have any questions, please feel free to contact me down below. Take a look at my blog at steemit.com/@BobTheBuilder. That's me. Or you can go see my other YouTube channels. I've got several YouTube channels at WatchBob on YouTube.com. Thanks, guys. Till next time. See ya.